Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Monday, the 20th of November, 2006, and the market's just closed. So let's take a look and see what we've got here today. Last week, before the semiconductors broke past that inverted head and shoulders I was pointing out on the hourly time frame, shares of Novellus were first to go. And Novellus broke out last Monday and followed through nicely on Tuesday. And that, I think, is what led to the strength in the semiconductors. Well, this is Novellus on the screen right here today. And you can see the stock had a huge day. CLAC also broke out at the same time last week. Not quite up as strong as Novellus, but it is bullish enough action to make me think that these semiconductors, the SMH on the screen right now, are going to continue higher up towards our bullish target of $36.15 from that inverted head and shoulders pattern. And just to remind you of that pattern, let's take a look at the half-hour chart. I'm not going to go back all the way, but we've got that head and then the shoulder was here. Our neckline was at 34.15. So if we took the height of the head and added it to the neckline, that was giving us a target of $36.15. Now the high just about a month ago was $35.95. I think we're going to take that out, and I think we're going to take it out quick and continue it at least up towards $36.15, which again is our target. Now when we look at the 10-minute time frame in the semiconductors, you can see that they've held up very strong today. The market has some what looks like good support down near the 35 level. That's where we've seen about 3 tests of support in that area. We've also got the rising 5-day moving average, which was touched near that area as well today. Now, I think that tomorrow breaking past about $35.70 is going to lead to that quick move up towards 36.15. So I think we're going to get a quick 45-cent move higher based on the strength of those the rest of the stocks that I had already mentioned. Now, longer term, I think that once we get above that 36.15, these semiconductors are looking a lot more bullish, and I think we've got the possibility to make it up beyond that, up towards the high 37s. Now, that's going to come after some consolidation and that sort of thing. Let's stay focused for now on this $36.15. And I think that strength is good. If we get that strength, then I think you're going to see the Nasdaq 100 continue to hold up, even as extended as it is in here. And it's uptrend line is way down near 43. Here we are more than $1, about $1.50 away, and we're up towards the top end. We're starting to hug this upper trend line, but the market is overbought. It's been overbought. There's been a lot of reason to stand back and doubt that it can continue to move higher, but that's exactly what the market does almost every single day here lately, it seems. Nasdaq 100 finished with a gain of 9 cents today, so the bullish trend continues in there. Let's stay focused on support near this $44 level that we had looked at over the weekend. We've also got that rising 5-day moving average, so we'll keep an eye on that. And the S&P 500, measured by the spiders here, SPY, they did make a new high, but weren't able to hold on to all their gains. The SPY closed with a loss of 4 cents today. I don't view it as the beginning of anything other than maybe some consolidation. Tough to say. If it's reached the upper trend channel, then maybe it's going to head up towards that 142 level. It's not our job to try and guess, but to respond and manage risk. That's the job of a trader in here. So we'll continue to look at support near this 139.70 level and just above that at 140, which is where we right now have that rising 5-day moving average, as well as some support from just in here recently. The mid-caps, MDY, these stocks continue to hold up great. Well, I've got it on the 10-minute chart, so let's take a look here. We've got this low from Friday. We've got a higher low today. I think this group is looking like maybe it's ready to break out again past 148. So we've got very good bullish action in the majority of what we're looking at here. And when we see the mid caps here on the daily time frame, I think our best support is down close to 145. But realistically, 145, I don't see that pullback coming anytime in the near term. I think 146.50 is going to be important, as is 147. So let's go ahead and take a look at the stocks, because we're obviously in a bull market. So the stocks that we had been looking at, first of all, China Tech Development, symbol CTDC. This stock I had suggested that We buy it between $8 and $8.10 a share. So there was an opportunity to purchase this stock in that range. We're going to place our stop at 785. So 785 was not hit today. So you ought to continue to hold this stock from the long side. And I think that 785 remains the prudent place to keep your stop in shares of CTDC. We'd also looked in the at the Asian stock called China GrenTech Corp, symbol GRRF, and the plan here was to buy it above $15.15, I believe it was, but the large gap higher invalidated that trade, so no trade should have been taking place in that particular stock. Shares of Lawson we were looking at as well, symbol LWSN. We wanted to buy Lawson above $9.72, $7.92. That strength did not occur, so there was no trade taken in that particular stock. Cyclone Pharmaceuticals, symbol SCLN. A couple people had noted that the COO had left his position, and in the comments this morning I said, you know, a lot of times that news doesn't really matter to the stock, that it still looks like a buy above $2.80, the recent resistance, and that our stop was going to go down at $2.70. $2.70 was not hit, so we're officially still in the stock. But maybe the stock needs to consolidate and digest that news a little bit. A lot of time, you know, just because the COO leaves, maybe the COO has been screwing the job up. I have no clue. I don't know anything about the fundamentals. But sometimes that's a good thing when you have a key executive leave. Last stock we looked at was Diodes, symbol DIOD, as a potential short sale. And the play in here for Diodes was to sell the stock short below $40 a share. We saw that happen early on. And our stop was going to go at $40.45, so we were stopped out with a 45-cent loss in DIOD today.